a light bulb went off my head with these business acquisitions, just because like using these SBA loans, I mean, 100%, 200% cash on cash return year one is like, it's not that uncommon.
Mm-mm.
And then you can go sell it at a multiple and you're getting cash flow. I mean, you can just see your way to a $25 million exit really fast. You buy a $2 million EBITDA business, you grow that thing, you're cash flowing the entire time, get it to 10 million, you sell it at a 4x multiple. I mean, that's a $40 million exit right there.
All right, guys, welcome to another episode of The Report. Today, as someone who actually is part of our boutique hotel mastermind, is doing a lot of big things in the business space, in the real estate investment space, and someone I got a lot of respect for, actually just down ripping in Cabo San Lucas recently. So I got my man, Jake Rosenthal. Jake, welcome to the show, brother.
Thanks for having me, man.
Yeah, dude. Appreciate you coming on, man. We were ripping down in Cabo. It feels like it was yesterday, but it was like almost 2 months ago already.
I know. It's crazy. I can't believe today's May 1st already.
Mm-hmm.
Time is just flying.
Yeah, dude. It's
flying.
It's May 1st, and it's been nice because here in San Diego, we had a really wet and cold winter. And as you know, you live here locally, we finally got some sunshine. I'm like, this past week has been amazing, dude.
I know. So we just moved out here in October, and I dragged my fiance out here from the East Coast, and all winter she's like, what did I sign up for? You said it's gonna be nice, 7 days a week. And meanwhile, it's raining 4 or 5 days a week. So I'm like, all right, this is the real San Diego weather here.
It's been nice, dude. Like, I normally walk this bay out here. It's about a 4-mile walk, but I'll go out here to the Star of India, like Portside Pier, and there's an Embarcadero that just goes all the way down through Seaport Village, the Marriott Marquis Marina, and down to the Hilton Bayfront and back. It's about 4 miles all along the water. It's like great people watching, and it just, I don't know what it is. You just walk along the water, you just feel better mentally. And I do that walk probably 6 days a week, but it was so wet and like cold that I was only doing it maybe once a week. And so now I'm like, dude, I get to do my walks again. It's freaking nice, dude. So it's been a nice time.
Totally,
nice change.
totally. And now we got the sunshine. I think it's late at like 8 o'clock now.
Mm-hmm.
So that combined with the warm weather really, really lifts the spirits for sure.
Yeah, no, absolutely, dude. So you moved from Philly, right?
Moved from Philly, but born and raised in Boston.
Born and raised in Boston. Okay. And so tell me, like, give me a little snapshot of what you're doing. I know you're a little real estate stuff and you got some business stuff, but give me a snapshot of what you're doing in the business space and real estate right now.
For sure. So I own a portfolio of luxury short-term rentals in Saint Augustine, Florida, and the Poconos. And so before I started looking at boutique hotels, I was actually on the grind to find a small business. That was my main objective. And I've kind of pivoted back over to that. I actually have a couple franchise locations called Alloy under contract. I'm closing June 3rd. And what I love about the business space is you get both the cash flow and the exit if you do it right. So you can buy these businesses at anywhere from, call it a 3 to 5x multiple on EBITDA or earnings. And then you can increase the earnings, and then you can, in 5-6 years, actually sell it at an even higher multiple of that, EBITDA. And all along the way, man, you're making really, really good cash flow. Like you can buy a, $750K $1 million EBITDA business that you're walking into that's already running, use an SBA loan, put 10% down. And it's pretty hard to ignore.
Yeah, I love it. So you said you're under contract to buy a business.
Yep.
Tell me more about this business. What is it?
So this one is called Out. So I never thought I'd do a franchise. I was like, I don't want to do a franchise. I want to do my own thing. There are some nice components of the franchise. They kind of give you the box of tools. You have the back end support. They help you with the marketing. You have the brand. And this one specifically, as part of another mastermind called Gobundance, I know about 10 guys who own them. So they have their own like separate little WhatsApp group going on. You have the support there. I met the owner, this guy, Rick Mayo, who's actually really tight with like Alex Hermosi, really stand-up guys. So I just got good vibes all around. And it was a really unique opportunity in the life cycle of this franchise. So they've been around since about 1999, but they just started franchising about 4 years ago. So with that, there's 250 locations sold and 50 that are actually up and running. But what that means is the cream of the crop territories are still available because it's proven, but young enough. So like F45, Orange Theory, all these other businesses, you're going to get the worst territories. I'm scooping up 3 territories in San Diego: Encinitas, La Jolla, Carlsbad, potentially Del Mar, like the best locations near the Whole Food. It's like it's higher end personal training. So I'm just getting the cream of the crop territories because I'm getting them pretty early. So I'm pretty stoked about it.
I love that. So, you know, as a guy that's into fitness, I do weightlifting. I go to a compound here locally, and I work out at Fit here a little bit as well. But tell me, what is this gym like? What makes it unique?
Yeah, so they're unique. So they're going after a niche of about 40 to 60-year-old high income earners. So
Okay.
call it 175K or more.
Okay.
40 to 60, 46-year-olds. So I don't know if you'd be like the target audience.
You said 30 to 46 or 40 to
40
46?
to 60.
40 to 60.
40 to 60. So,
I missed the cutoff by like a year and a few months.
so I did a trial workout. I went to their discovery day just to check it all out a couple weeks ago. And they can scale it, man. They did a good workout for me. So you can still do it if you're younger. It's just kind of the target clientele is that older demographic. They're just trying to get into working out, and it's groups of 6. So it's really more personal training in a group of 6 that is less class based.
Okay. So if I walk into one of these gyms, what am I going to get? I'm going to get a group workout with 5 other dudes. And we have a coach.
Yep, you got a coach.
And what do the workouts consist of?
So it's mostly circuit training. So it'll be like 3 different circuits of all full body, legs, chest. It's full body every time, and it's I think usually 3 or 4 different circuits. But you get pretty smoked, man. Like I got a
People
good
get
workout.
pretty ripped.
Oh yeah,
yeah.
I got a good
Weights
workout.
too, like light weights.
It's weights.
Push-ups.
I mean, it
all that
scales
stuff?
up and down. So they have 3 different levels: beginner, intermediate, and advanced. So they do a whole assessment. You walk in, they do the in-body scan, they do a mobility scan, and they kind of see where you're at in your fitness journey. And then you get like an internal rating of your fitness level based on that. And then they'll tailor the workouts around you. So you can get a really tough workout in for sure.
Okay. And then what's the price point for a membership there?
So depends on market. San Diego being a more expensive market because rents are probably more expensive here, and it can support that. It's somewhere in the ballpark of about $500 to $600 a month, depending on if it's 2 to 3 times a week.
Okay.
But if you think about it, it's actually substantially cheaper than personal training. Still, it ends up being anywhere from like 40 to 50 to $60 a session. Personal training is usually like $110, $120 a session, and you're getting the group atmosphere. So. People really like that.
That's kind of cool too. Get to connect with other guys that have the same common goal. Okay, so how many of these classes can you host in one gym per day?
So,
because you're saying just group of 6, right? Is it 1 per hour? Is it 1 every 2 hours?
So I think it's the standard hours are like 7 to 12, and then they shut down for 2 hours and like 2 to 6 or something to that effect. Full membership is 130 members. And then you can actually get up to 150, but it's a semi-absentee ownership type of model.
Yeah.
Where you hire a GM, you hire 2 trainers, and if you do it right, once you get it rolling, it's gonna be a semi-absentee.
I got my calculator out, man. You're telling me 150 members max at $600 a month. So you're looking at $90,000 a month top line. And then what's your overhead?
So it's actually higher than that because, depending on, because there's different schedules throughout the day, right? So it ends up being underwriting like the San Diego market anywhere, once it's fully stabilized, after paying your GM, after all expenses, anywhere from like 180 to call it 300K pure cash flow after all expenses per location.
Per year. Got it. Okay. And then, so top line, I got 90,000 a month here. You're saying it could be a lot more than that.
90,000 a month.
Times 12 months, we're looking at just over $1 million a year.
That sounds about right.
Okay.
About right.
And so, overhead wise, you said you got a GM, you got 2 or 3 trainers.
Yep.
And then you got a location, you got to pay rent, right?
Yep.
Other than that, is there any other big overhead?
It's pretty, except like, electric and utilities and stuff.
And all that,
it's pretty simple. That's what I like about the business model. It's like a 1,500 square foot box, couple rigs, some weights.
Now, when you're getting 3 locations, you said, here in San Diego?
I'm starting with 3 because they give you a break on the franchise fee. So instead
if you get 3.
Okay. And then you get to reserve your territory. So you only still have to open 1 at a time. And you don't have to open the second and third one until the first is stabilized. You don't have to open the third one until the second stabilized. But you get to put a hold on those territories, and you get the discount on the franchise fee, which I really liked.
Okay.
And just economies of scale. I'm not going to do one, I'm going to do
For
three
sure.
and make it worth my time.
Are you doing an SBA loan?
SBA loan.
And will the SBA fund all three or just the first one?
They will fund all three. The one caveat is they won't fund the second one until the first one's stabilized, which is fine. That's how I want to do it anyways. But I feel like there might be some frustration there where it's like the first one's rolling, I'm ready to go, and they're like, hey, we want to see 3-4 months of P&Ls before we roll to the second. But it's part of the game. It's all good.
Yeah. How does it work if you, let's say you stabilize one and you're like, man, this thing's crushing, but I'm ready to exit. Can you sell to another franchisee, or how does that work?
You can sell to another franchisee or sell elsewhere.
And you get to pick your price?
Yeah. So these things actually, franchises, especially this franchise, they sell at a higher multiple. If I were to go open Jake's Gym, selling that would probably be a 2 to 3x multiple, maybe. A franchise, they can sell anywhere from a 4 to 8 to even higher multiple.
And that's just because it's seen as lower risk. You got the SOPs, you got the systems and processes down. And it's a proven model. They proved it out over X amount of locations. And so it's just people are willing to pay a higher multiple for that same set of cash flow.
Exactly. And if you get to, my goal is to get to over 5 and then actually hire like a regional VP to take my place to hire the GMs. And if you get to that point, then you're really cooking with gas. Because if you think about it, if you go to private equity or a private buyer and you have just, you got a good VP in place, you got all the GMs in place, they're fully subscribed, that's a home run deal for anyone who's just trying to get more of a passive investment. You can probably sell it closer to like an 8x multiple at that point.
With the membership costs, let's just say that you fill up the full 150 at the first location quick. Can you set your own pricing and be like, you know what, I'm going to push my pricing up?
There's a tier system, so you could definitely push it to the higher end of like what their tiers are, which I think goes all the way up to like 750 or something. But I think pushing it much higher than that might break the model a little bit. But I'm sure you could.
So what's the process going to look like for you once you open up the first location to fill up the first 150 members? What's the game plan there?
Yeah, for sure. So they actually, what I love about it is you don't even open up the first location until you pre-sell your memberships.
All 150?
Just to get to stabilization. So it's like 75 or 80 gets you in the black. And then once you get to that point is when you officially open. So you pre-sell them. And I'd be having my GM do that. So I'd be hiring a GM who really knows sales game and is doing these calls. They help really funnel a lot of these leads in. And in talking to some guys in my network, it actually works. Like you're actually getting lead flow, and my GM just has to convert on them.
Yeah. So you're doing like a pre-launch special. So the first 75 members get some sort of special for first signing up first.
Exactly.
I love that.
Exactly.
Okay. That's cool, man. That's exciting stuff. So, San Diego is a big area. We got a lot of really cool neighborhoods. And I feel like, one of the things I love about San Diego is you can drive from any corner of San Diego to the other corner in 20 minutes or less, which is pretty cool. But there's a lot of different neighborhoods. And with that comes different demographics. Which neighborhoods are you targeting?
So right now I got a claim on La Jolla.
Okay.
Encinitas.
Big money in La Jolla. Dude, you might have to raise your prices more than the 750.
I know.
And put a comma in there at least.
Exactly. So La Jolla, Encinitas, and I want Carlsbad or Solana Beach. Someone already has like a stake on it right now, so we got to see what happens there. But I have Carlsbad as my third one. So all the demographic data that I pulled, man, is solid. Like tons of high income earners over 200K. And then the demographic is in that sweet spot. So
yeah, high percentage of population in that 40 to 60 range. Because you come to Little Italy, you're probably not going to get as much of that 40 to 60, but that makes a lot of sense. Okay.
Exactly.
So the first one's going to be La Jolla?
It depends. So the good thing is I have these 3 locations to search for. And, commercial real estate, the biggest bottleneck, even in, retail, is just finding the right space, because you want to be in the cream of the crop. You want to be in those bougie centers with Whole Foods and Lululemon and Trader Joe's and all these places. And there's not just open retail space in these centers for the right price point with the right square footage coming up all the time. So that's the biggest bottleneck. So with that, I'm going to be searching in all 3 locations simultaneously. And then I'll move forward with the first one that pops, if that makes sense. Just move as fast as possible.
I love that. And so, a lot of these retail leases, office as well, typically 36 months. And then you get some sort of tenant improvement allowance,
Yep.
which you can negotiate. Typically, you work with some sort of broker that will represent you as the renter, and you go back and forth. I know with this office, we negotiated a tenant improvement allowance. It was like $30K that the landlord threw in for us to use towards improvements, which was kind of cool. We actually used some to do the podcast set, which was kind of cool. And then we got 3 months free, and that was all negotiated. But with you doing this build out, I imagine the build out's gonna be a lot more than $30K. What does a build out run for something like that?
So it depends. If it's a shell, it's still pretty basic though, because you're just really, throwing up some drywall, nice walls, and some flooring, and it's a box, 1 bathroom. So maybe if it's a shell, 100K. But it's not gonna be much more than that. It's 1,500 square feet, and it's pretty basic. So that's kind of baked into the pro forma and the underwriting. So on the higher end, like even if it was a 200K build out, these won't cost more than 500K all in. SBA loan anywhere from 10 to 20% in. So really, after
the SBA will fund the build out too?
Yep, they'll fund it all.
I didn't know that.
The all in costs.
Dude.
Yeah.
That's pretty powerful.
Yeah, exactly.
Wow. I didn't realize that.
That's why when I started looking at, don't get me wrong, I freaking love real estate still. I love boutique hotels. I love short-term rentals. I think there's so many benefits you get in real estate that you don't get anything else, the tax benefits, everything.
Mm-hmm.
But a light bulb went off my head with these business acquisitions, just because like using these SBA loans, I mean, 100%, 200% cash on cash return year one is like, it's not that uncommon.
Mm-mm.
And then you can go sell it at a multiple and you're getting cash flow. I mean, you can just see your way to a $25 million exit really fast. You buy a $2 million EBITDA business, you grow that thing, you're cash flowing the entire time, get it to 10 million, you sell it at a 4X multiple. I mean, that's a $40 million exit right there. It's a lot easier said than done. You got to find the right business. It's a ton of hard work.
Yeah.
But they're out there.
Yeah, absolutely. If you love real estate investing, passive income, and tax benefits, but don't have the time, my company, Summers Capital, is buying boutique hotels right now. We source the deals, we renovate the properties, and we even handle all the day-to-day management, making it truly hands-off for our investors. If you want to learn more to see if we can help you, visit summerscapital.com/invest to book a call with our team. Again, that's summerscapital.com/invest. Now back to the show. I know with all these baby boomers retiring, I mean, 40 million boomers in the next 7 years projected. There's a lot of businesses out there that are going to be sold, and most of them are not going to sell. And so I think it's a massive opportunity for people to come in and pick up existing businesses, buy some franchise locations like you're doing, and come in and fill some gaps in the marketplace. I mean, every marketplace has gaps, and there's demand for certain things. I mean, you're getting into the fitness stuff here, and I think in San Diego, everyone works out here. I don't know many people that don't prioritize fitness because the weather's good. I was living in Oklahoma City back in the day, and I think over there people tend to just be out of shape. They don't really prioritize fitness. But out here, everyone's like, it's cool to work out. In Oklahoma, it wasn't cool to work out.
For sure.
So,
Everyone's looking at you like you're all weird. They're like, what are you doing, man?
Yeah. So it's interesting. I do follow a lot of Alex Ramosi content. He always reframes and talks about his gym stuff back in the day, and so it's interesting to kind of hear how the progress of how the gyms have evolved. I feel like now you got all these different franchises out there like F45 and all these different concepts, and they all work. I mean, there's even concepts where it's just you go in there and run on a treadmill.
For sure.
And people
I think that's
sell
Orange
those.
Theory.
Yeah, Orange Theory.
Yeah.
And they're big. They're blown up. So I think there's definitely demand in that fitness arena, especially in these warm weather markets.
Totally. I feel like there's just so many different avenues to go with the business acquisition stuff, and I'm still totally game to pursue different avenues. But for me, I freaking love health and fitness. And there's something rewarding about helping other people, giving back to the community, making people healthier versus if I were to go by a roofing company, it'd be all right, you might be making some good money, but I don't know how passionate I'd be about it. So I was like, all right, this is a good spot to start, I think.
Mm-hmm. So the founder, he's in gobundance?
He's not personally in gobundance, but a bunch of the guys who have bought them are in gobundance. And I met the founder, just super solid guy, solid guy.
Okay. It was interesting when you said there's 50 locations up and running, but they've pre-sold 250. And so I was like, oh, what's the reason for that gap? But then it makes sense. You can purchase 3 to get a discount, and then you just launch one at a time before you pick up or open the second and third one.
Exactly.
So it makes sense.
And they're so new that there's just the bottleneck of people buying, and they're still trying to find the retail location, a bunch of different reasons. But they're past the point of it, in my opinion. I'm a big contrarian in nature, like big Bitcoin guy. I joined one of my companies pre-IPO and hit a big IPO. Like, I just think in life, to get outsized, return, you have to take on some risk.
For sure.
It's just not going to happen.
I mean, it's
otherwise.
entrepreneurship, right?
So I think that I'm taking on some risk here. It's not F45, it's not Orange Theory, but in my mind, I'm like, the model works. And I think the upside is there because I'm getting the cream of the crop territory. So if I waited 4 years, sure, would it be more proven out? Yes. Would the best territories be gone? Yes. The return for me would be off the table at that point.
Yeah. So I know this isn't the first franchise you were looking into. I'm sure you were doing some due diligence and looking at what else was out there in the marketplace. What other arenas were you considering buying in?
So before this, man, like I was saying, I was really mostly just service-based businesses, not really even in the franchise space. This is the first time I really considered the franchise space.
What services were you looking at?
So restoration companies are hot right now. And then the same with like HVAC, like all these home service-based businesses, because they're recession-proof. Like people are always going to need those services. Restoration specifically, because they deal with it's mostly B2B if you do it right. And that's the spot you want to be in. And you're dealing with insurance. So if you're getting your payout from insurance, the economy shits the bed. Like, you're dealing with it. You're getting your payout from insurance, not from, a consumer.
Yeah.
Which is a good place
but
to be
sometimes
in.
insurance doesn't pay out.
That's true.
We're going
That's
through that
true.
right now.
That's true.
But it's funny you mentioned, so we're working with my buddy's company, actually. They actually bought this not too long ago, but it's a restoration company. What are the chances? And they do remediation for like water damage. They do roof repair work, all that sort of stuff. So when we had all the record rainfall in San Diego in our hotel, some of the units got flooded out. Insurance denied our claim. And then they have an in-house adjuster. So we've been working with them, but they went ahead and basically renovated all these units. We got them back online. And so we're up and running. And yeah, it came out of pocket a little bit. But now they're going after the insurance company. And so to your point, yes, they do go after the insurance company, and hopefully we'll recoup whatever we can. But I feel like a lot of those insurance companies, man, they try to find every single loophole, every single angle to like not pay out. I'm like, I get it, but I didn't realize it was like that hardcore, especially in the commercial space. I think residential is a little bit easier because they have like a little bit more bureaucracy they got to like play under and red tape. But I think in the commercial space, it's like the wild, wild west. So my biggest takeaway was, if we ever have a big claim in the commercial space, just go straight to an adjuster and let them go to bat for you, because they know the angles.
I have a buddy who's actually an adjuster. He owns a company, and that's a good space to be in as well.
They go through the policy and they comb through every single line of your policy, and then they know the angles. Let them do the communication.
Yep. Yeah. Exactly.
And also, I think there's something to be said of like, if the insurance company is dealing with like a public adjuster or like an engineer, they're gonna take them a little bit more seriously. You know what I mean? For
sure. Yeah. They know they're dealing with someone who knows what they're talking about, versus they probably ask you a couple questions, or whoever they ask a couple questions. And they're like, oh, this might be like the first claim this person's dealt with. We're going to take them for a ride.
Yeah. So yeah, I mean, and that was kind of a takeaway for me. One of our team members who's no longer with us had a conversation. So I don't know exactly what was said. And so based on that initial conversation, they denied our claim. Right. So I don't know, learn a lesson for me, but it's part of the game, right? Entrepreneurship, real estate investing. It's like no day, no week, no month is ever the same. And, we learn and we get better and we move on.
Totally. It's part of the game. You got to get punched in the gut once or twice to learn there's lessons. I mean, you're just not going to know until you go through it. And it sounds like you guys are going to still end up in pretty good shape. So It is what it is.
No, absolutely. So tell me about this exit. You said you were working with a company and you guys had a big exit.
Yeah.
Tell me about that.
So I was in tech sales before all this. I joined this company, Alteryx, straight out of college. Started out in like a low-level role. Did pretty well there, but I got some stock options. I was 22 at the time, living out in Orange County, actually. Not too far from where you lived in Newport Beach.
Newport Beach.
Newport Beach.
Really? Not that long ago, or what?
Yeah, this was, I'm 31 now, so this is when I was 22. So I was living out there, joined this company, Alteryx, and was doing well. And I remember like a couple years in, they're like, oh, we're filing for an IPO. And I was like, I don't know, what is that? So I did pretty well on that, but it was an entry level role. So the stock package I got, the pre-IPO stock package, was pretty small. So I made, a little bit of money with some good seed money for a couple properties and stuff. But after that, I was like, all right, I see something here. So worked my way up at that company, and a buddy of mine moved to another company called Snowflake. And there's some whispers, Snowflake is the next big thing, yada, yada. And he was trying to recruit me over. And eventually I was like, you know what? I'm gonna roll the dice here, because I knew that if this company hit like everyone said it was gonna hit, and it was a much bigger stock package at this point, because now it's like a bigger sales rep. If I don't join this company and they hit, I'm not gonna be able to live with myself. If I go and they don't hit, then whatever, I shot my shot. But I know if I saw a couple of my buddies hit this huge IPO, I would kick myself for the rest of my life. Sure. I'm so freaking happy I made that decision. So joined this company a year in. Filed to go IPO. They brought this guy, Frank Slootman, over a couple months in. He's like a legendary CEO in Silicon Valley. He's taken 3 companies public.
They brought him in just to ramp up to
pretty
go public?
Much. So a month after I got hired, they brought him in. And my old boss called me, goes, dude, you just made the best decision of your life. Frank Slootman just joined, and this guy is like
a stud.
So a year in, they filed the IPO. And
what did Frank do that was like pivotal for you guys?
He was just a no BS type of guy. So I think in like today's culture, there's a lot of softness that goes around in these companies, the ping pong, the beer, the coffee. And he was this guy who just came in and was just no BS, like, we're going to succeed at all costs type of thing, and didn't really care what anyone thought of him. And he just has that reputation, but he's very sharp too. Yeah. And just knows how to turn a business around. So about a year in, they filed to IPO. And I remember the IPO day was, I think, September. It was during the pandemic. It was September 2021. And man, so that thing went out. It was supposed to be like $50 when it went out, or $100. By the time it actually hit the open market for retail to get it, it was at $220, and it traded at $400 day one. $400? I remember sitting around with all my colleagues like, holy shit, like, from, I was doing all the things before. I was house hacking, stacking my money, and I had a couple properties already, but man, that took me from like $0 to a couple million overnight. And I was like, wow, I'm so happy that I took that risk. Yeah. And went to that company. So
how does that work? If you're part of a team and you guys have this big IPO, you guys just get paid out right away, or how does that work?
It's not. So then you got to earn it. So basically you get, say you have, making this up, 12,000 shares. After year one of being at the company, the first 3,000 vest. And then you have ownership of them. And then 1/12 of those vests every year after that. So basically you have to work there for 4 years to get all the whole package.
And you did the full 4?
I did the full 4, because after you see those numbers up on the board, you're like, I gotta make it. Because if you get fired or you leave early, you only get however many you've earned to that point.
And at what point, like, the price per share only matters when you're leaving or taking the chips off the table?
When you can sell as you go.
But you have to earn them first.
You got to earn it first, and then you can sell during the non-blackout periods. But
they have blackout periods?
There's blackout periods right before earnings, because you could have, you don't have it, but you could.
You have a little bit inside knowledge.
You could.
Okay.
So fortunately, I took a good amount, not at the tippy top, but like in the 300s, like pretty close to the top. I took a lot of chips off the table. And then I've took some lower, because everything's taken a dive, but my average sale price is probably like in the 200s.
You still own any?
Pretty much offloaded all of it, man, and pushed it into real estate and Bitcoin. And yeah.
So you put it all into hard assets, except for the Bitcoin you can kind of consider as there's only so much supply of it, right?
21 million, man. Yeah. It's hard coded into the algorithm. It's the hardest asset out there.
Yeah. What's the price of Bitcoin trading at right now?
So it's actually just took a dive, which everyone freaks out about, but it's all part. If you look back, this happens all the time. It's trading at like 57,000 today. It was up to 71,000 at one point.
That's the all-time high, 71,000?
The all-time high is 71,000. And I think this cycle, so the Bitcoin halving just happened, I think it's going to run up easily past 200,000. I've heard some calls closer to like 400,000. I think we're going to see $1 million Bitcoin by 2030.
Really?
Very confident in it.
You're bullish on that?
Very bullish on it.
Okay. I used to mess around a little bit. I never knew like all the ins and outs of of trading coins, but I got some buddies that are like super into it. And so they'd be like, oh, pick this up, pick that up. And I just kind of did it for fun, just kind of like gamble money. And if I lost it, I was like, whatever. But I had like Coinbase, what's the other one? It's crypto.com.
There's
I
a
had
couple of them.
Coinbase and I had crypto.com. And it was fun. It was kind of like, this is like kind of like during the pandemic, and I was kind of messing around a little bit. I had a little Ethereum, a little bit of Bitcoin. And then there was some other ones that my buddies were like, oh, pick this one up, pick that one up. But I ended up selling it all off, and now I'm just like pretty much all in real estate. But I could be down to maybe pick up some more Bitcoin.
Bitcoin
Do you think it's a
only,
good buy
man.
at 57,000?
I think it's a great buy. So this is the story every time. So the last 4 halvings, which is every 4 year, the supply is cut in half. It was $8 in 2012. Then it was 808,000 in 2022,
So
and
10x
now it's 64,000. It just the story is always this. I wish I bought it when it was this. So the people who bought it at $1 and sold that at 30, they felt like geniuses, but it keeps going up over time because it's hard coded into the algorithm. So if you look at the Fed right now, they're printing, we have a real big problem going on.
Yeah, they printed 80% of the money supply in 4 years.
Exactly. So actually 14% on average every year, they're adding units to the ledger. So they're adding more money to the system on average 14% a year. In the past 5 years, you've lost about 93% of your purchasing power. So think about that.
Yeah.
That's crazy. We're going into another $1 trillion of debt every 100 days. It's just not scarce at all. So now you have this asset, Bitcoin, which is hard coded into the algorithm that there can only ever be 21 million Bitcoin ever.
That's pretty crazy. So when's the next halving?
It just happened.
It just happened.
It just happens.
Okay. Was there much of an effect in the pricing?
So it usually happens 6 to 18 months post halving. It's not right away. There's a lag effect on it.
Okay. So 57,000, good buy right now.
I think it's a phenomenal buy.
And what was the number you said in 10 years it's going to be where?
In 10 years, I think by 2030.
You threw out $1 million.
I think 2030, $1 million. 10
That's
years.
6 years. That's 6 years out.
Yeah, I mean, 10 years, couple million.
Dude, I'm
bucks.
going to have to bring you back on the podcast in 6 years. Save this clip, Parker. That's a bold statement.
I'm confident in it,
yeah,
man.
I like it. Do you know Mark Moss? He like does a lot of crypto content, but I had him on the podcast like 3 months ago, and he was saying some really interesting stuff. But yeah, it's interesting to talk shop on the coins and all that sort of thing. I don't know much about it, but Bitcoin is probably the one that I would put my money into if I was going to buy one.
For sure. Yeah, I mean, it's hard coded into the algorithm. Like the Fed can continue adding units to the ledger, can continue debasing the currency, and Bitcoin's the first of its kind that nobody can touch it. It's going to only be 21 million ever. 94% of the supply is already in circulation. 94% has already been mined. By 2034, it'll be 99%.
What is what's another coin that you would buy?
Nothing.
Zero.
Only Bitcoin.
Really?
It's the only true hard asset that's completely decentralized. So this guy, Satoshi Nakamoto, I don't know if you know the story. He was the founder of Bitcoin. He was pseudonymous, so no one knows who this guy is. He still owns $1.5 million coins, which equates to an insane amount. And he's just never going to sell them because he did it for the good of mankind. And this guy's going to go down in history next to Einstein. I mean, this guy he created a 0 to 1 invention by creating Bitcoin.
Are there many countries right now that are using Bitcoin as their main currency?
So it's starting to happen. El Salvador, for instance, implemented Bitcoin. I think they own like 400 billion or something at this point, like quite a lot. They've done really well. And then you see companies like MicroStrategy who are buying Bitcoin as a reserve asset. MicroStrategy has gone like 20x just from simply from buying and holding Bitcoin on their balance sheet. And what they're doing is they're issuing more stock, borrowing against that stock, and then continuing to buy more and more Bitcoin. So yeah, you're going to see more and more nation states do that. And what's really cool is it's global money, man. So if you think about it, there's a lot of these countries where people are unbanked. They have no way of, if you live in Africa, you can't just go to a bank. I mean, you're unbankable. So all you need with Bitcoin is a phone and an internet connection, and you can send, receive, and store value. It's the first of its kind that allows you to do that. It's global money and the first of its kind.
Dude, that's big time right there, man. So you're getting in this franchise, the fitness space. You're looking at different locations in these 3 markets here in San Diego. You're messing around with the Bitcoin, and then you got a fiance that's working for ESPN. She's an anchor. Fill us in a little bit about what she does.
Yeah. So she is a production assistant for ESPN. And so like a lot of the clips that happen, like telling the player backstory before the game and stuff requires like compiling footage, making the script for, like the Lisa Salters of the world to, go through it. And so she compiles all the footage, comes up with the story, writes the script, that type of thing. And then she's on the road every week for Monday Night Football in the truck. She'll do some in-game stuff like calling up to the booth when there's injuries and that type of thing. So
that's so cool.
It's a cool gig for sure.
Yeah, that's really cool. How did she get that gig?
She just got into the world just like everything else, man. It's all connections. So she started working for like NBA Films straight out of college, and met some people, applied, and then just got in the door.
What's her like vision end game? Like what's her ideal position?
Yeah, I think she's just trying to work her way up in the for Monday Night Football, because that's like the cream of the crop at ESPN.
So she wants to be like the next Lisa Salters?
No, she's more so like behind the scenes stuff. So like production stuff. Yeah.
I love that.
Yeah.
I love that. And then you're doing the short-term rental stuff.
Yep.
Give me a snapshot of what you own right now, short-term rental wise. How many properties?
So I own 4 what I call like luxury short-term rentals, all pool homes right by the beach. 5 bedrooms plus, game rooms, got the tiki hut, like all the unique amenities, and they're pulling in like on average 200 to 250 gross a year.
I love that.
So they're doing really well.
Yeah, get the cost seg studies on them, get some tax breaks, a little cash flow. Are you self-managing those?
So I was up until about 6 months ago, and I finally was like, man, I gotta hire a VA. So I got a solid VA, created all like the SOPs and Loom videos, got him ramped up, and now he's doing his thing. So I'm pretty removed from it. Like I'll oversee some of this stuff, but I'm pretty removed from the day-to-day, which is nice.
I love that. It's a good spot to be. And you recently launched a podcast. Tell me a little bit about how the podcast, how's that going?
I've been loving it, man. And shout out to you and obviously the mastermind for giving me the motivation to do that. Like I would say just candidly before that, I was like, I'm not going to do that. Like that just wasn't me. But it's just so apparent, like what the value is, just to even like talk, like sitting here with you chatting and having some really cool guests on my podcast and being on their podcast. It's just like the biggest win-win in media, right? Like it's a win-win for everyone involved, an awesome opportunity to connect with some really cool people. So it's been awesome, man. Just chatting with people, getting that launch, just honing in on my craft. And
you definitely have, between gobundance and our mastermind and all these networks that you're plugged into, you have a lot of high caliber folks that you can bring on as guests.
Totally.
So I'm excited actually, we're going to rip on your podcast here in a second. So I'm excited for that. Life on Your Terms with Jake Rosenthal. What do you talk about on your pod, man?
Yeah. So it's all about basically, per the title, kind of living life on your own terms. So just left the W-2 in July, and now
congratulations.
Thank you, man. Big step. And now I'm just in a spot where like I can live each day on my own terms. Like, and a lot of people are like, I feel like a lot of people before they leave the W-2, they think, oh man, that means sitting on a beach and chilling and sitting by the pool. It's like, I have a pool at my house and I use that thing like once a month because I'm still grinding. The nice thing is I'm grinding on what I want to be grinding on. I'm not grinding because my boss is telling me I have to do this. I'm grinding on building my own business and my own thing. So just living life on your own terms means a lot of stuff for a lot of different people. But that's kind of the message of the pod. The pod is interviewing all these high achievers to see all the different routes you can take to achieve that life on your terms. And I'm thinking of growing like some sort of community around that as well. TBD.
Online community?
Some sort of online community.
I love that, dude. I'd be happy to help you in any way I can with that.
Oh, cool. Appreciate that. Appreciate that.
I got to ask you, man. So when I first met you in person, up until that point, it was just on Zoom calls. And you were here at the holiday party in our office. I met your fiance. And I was like, dude, you're freaking jacked, dude. And because you do the Zoom calls, you can't tell. Dan Martell's another one where I'm like, dude, this guy is 6'3" and freaking jacked. And on social media, you can't really tell. But in person, I was like, damn. And so I got to ask you, man, natural or are you on testosterone?
No, all natural.
Okay,
All
okay.
natural. I've gotten I have the walk, probably the biggest hack in terms of getting more cut recently is the walking treadmill desk.
Okay,
So
what
I'm
is
just
that?
basically you got a standing desk and then you have a little like treadmill walking pad under your desk.
Okay.
And I'm just jamming out on that thing
Oh,
all
while
day
you're working.
while you're working.
What?
So you end up walking like 15, 18 miles a day. You do the math on that.
Dude, that's crazy.
So that's been a game changer. And
How do you
then
get a treadmill for that?
it's just online. It's a couple $100.
No, just okay.
Yes.
I'm gonna have to order some.
Oh
the
man,
office.
and you feel good all day.
I've never heard of it until right now.
It's great. And then just lifting weights, eating super clean. And that's it, man.
So you're saying 15 to 18 miles walking on a treadmill, just like working at your desk.
Yeah.
And how many calories does that, equate to?
I think every 3 miles is like 250 calories.
Dude,
so
that's insane.
It's a lot of and you don't even realize you're doing it.
So you could potentially burn an extra 1,500 calories a day just by 2,000 maybe.
Easy.
Really?
Easy.
That's a cool hack. I'm gonna have to try it. And what does one of those treadmills cost?
You can get one on Amazon. Like the one I have is only like $300.
Okay. What's the name of it? Do you have a name?
I think it's Rhythm Fun. This one is a good like starter. There's nicer ones you can get, but that's a good like quality starter one.
Okay. $300, man. I'm gonna have to get like 4 or 5 of them for the office.
Dude, you should. But yeah, man, just that. And like, I think lifting weights, like I think a lot of people just hit the cardio too hard, but it's all about if you lift weights, you're burning more calories at rest. And once you just start understanding like the bulking, cutting, all these different things and just eating super clean.
I love it, man.
Yeah.
Well, looking sharp, dude. And appreciate you coming on and hanging out, man. Definitely inspired by everything you're doing and excited to kind of see where you go next, man. I'm definitely a fan. So thank you for coming on. Where can the folks get in touch with you?
Yeah. So Instagram is jake.r.rosenthal. Got the website right now is purelegacies.com, but I'm going to be launching a new website for that community I'm building. So
there it is.
TBD, I'll give it to you guys, drop in the show notes, and obviously check out the podcast, Life on Your Terms with Jake Rosenthal.
There it is. Check it out, and let's get this community going, man. I'm excited for you and excited to rip on your podcast here in a second. He's Jake Rosenthal. I'm Rich Summers. Listeners, thanks for tuning in. We'll see you in the next one. Peace.